Well, let's get some updates from the GST Council meeting yesterday as well. No major decisions really were taken, but a slew of issues have been referred to the ministerial panels. The Council has referred the matter of compensation cess to the new panel of ministers. Decisions on reducing GST on life and health insurance premiums and payment gateways have also been deferred, pending a decision by the group of ministers. Tax on cancer drugs is also being cut, while GST on namkeens has been cut to 12% from 18%. Why don't we quickly hear out the Finance Minister, Nirmala Sitharaman, on the key decisions taken, and then we'll invite our guests in.
The rate rationalization GoM under the Deputy Chief Minister of Bihar will be doing its job. But under his leadership, with newer members who have volunteered for the limited purpose of medical health insurance related GST, we have told them that they will look into this matter and come with a report by end of October, just 1.5 months' time. And the GST Council, which will meet in November, will finalize based on this report, which will come from the GoM. We have agreed to form a GoM, which will now take it up to study every state and their discussion, because Karnataka minister came up with figures which are applicable to his state. So we've said all other states which want to give theirs, we're not compelling anybody, but whoever wants to give can give. They will be, again, a group of ministers who will decide how to go forward in the name of compensation. Says it shall no longer be compensation post March 2026, but that says how to go about it, what to do with it, and so on will be discussed by the group of ministers.
Okay, well, let's talk more about this. Pratik Jain is partner at PwC India, and Saurabh Aggarwal is a partner at EY. Gentlemen, great to have both of you here. Thank you for your time. Prashant here. Pratik, bit of not a dampener, maybe more coming, with a lot of matters being referred to the group of ministers. But what stood out to you?
I think I don't agree, Prashant, that was a dampener. I think there's a lot of good decisions which were taken. If you talk about the industry segment which got benefited, clearly airlines, foreign airlines is one, where there's a clarification. Data hosting services, data centers, they said that it will qualify as export. On real estate, they said that preferential location charges will not be subject to, or will be subject to GST at a concessional rate, not at 18%. And for electricity distribution companies, they said that anything which you collect, like electricity charges or electricity meter charges and etc., will not be taxed and so on. So I think there was a lot of positives to be taken from this. Also, the rate rationalization, it seems that government is now in a hurry to kind of do that quickly, which was in the offing for last 2-3 years. So in next few months, perhaps a decision will be taken on that as well. Yes, there are decisions like insurance, health insurance and life insurance, etc., which has been referred to the GoM. But I think that decision will be taken soon on that. So overall, I guess a lot of positives to be taken from this.
You know, when I say dampener, it's always from what the market. I mean, it's a high bar for stock markets, Pratik, you'd agree, right? But there is, of course, that matter of health and insurance was one. And the other one for real estate, it was not really, of course, something, but, something on cement. I don't know if really that was really something which perhaps would have been considered, or were you hearing anything, Pratik?
Look, I think that'll be part of the overall rate rationalization exercise. There is perhaps no immediate need to kind of look at that. And if you look at cement, even prior to GST, the rates were quite high. I mean, an effective rate of taxation was higher than what you have today. So obviously there is a logic to this, but I guess that'll have to be looked at as part of the overall rate rationalization. I don't think that decision will be taken in a hurry.
Will not be taken, and perhaps part of the overall rate rationalization, as you said. Saurabh, coming to you, what are the aspects which stood out to you?
So, Prashant, I think there were three main things which were there in the GST Council and which were being considered. The first and the foremost was around the GST rate rationalization piece, wherein they have formed a committee of group of ministers to take care of the same. The second thing, which is around the entire digitalization, I think that's the key one, which is around B2C invoicing, which will take care of the fake invoicing which is happening in the system. At the same time, when we look at from a perspective of the invoice management system, which has been the aim of the government since the launch of the GST reform, wherein there has to be a concept of mismatching, and they have approved the invoice management system as a concept to go ahead with, which means that the industry should look forward to more digitization and more forward-looking approach in terms of matching concept and digitization from the end of government. And the third thing is that the government's intent has been to settle the disputes, whether it has been in case of advertising agency, or it has been in case of foreign airlines, or it has been in case of the payment aggregators. They have been looking into settle the disputes while the payment aggregator issue may not have been resolved. I think something which got missed, which I will say, which was a lot of expectation of the industry, was around the foreign shipping line issue, where the foreign shipping line, foreign airlines, more or less the issue is the same, but the foreign shipping lines maybe has been deferred to the subsequent council meeting.
Saurabh, on the on health, right, with medical group, term, etc., do you think, of course, it's been referred to the GoM, but what are your expectations? And I mean, should we take it as a given that it will be, I mean, rates will be brought lower?
So I think the intent is very clear. They are considering around 3 or 4 options. One of the option is to bring down the rate to 5% for all type of health insurances, etc. The second option which they are exploring is to bring it down only for senior citizens. Third option which they are exploring is to exempt the entire, you can say, GST on the insurance sector, on health insurance and life insurance. I think the likely option which they should go ahead with in near future should be the 5% rate of GST. That's more so because when we look at the amount of insurance which the Indians have been taking compared to any of the developed countries, we are still very low when it comes to the overall insurance being taken by the Indian citizens. So I think there is a requirement to push this particular part by bringing down the cost of insurance.
And this is, I mean, all of this will typically just be, in a way, pass through, right? For companies in that sense. For viewers who are watching from a stock market angle, Saurabh, I mean, if, say, for example, this is rationalized, I mean, you essentially pay less premiums.
Yes, correct. You pay less premiums.
Right. Pratik, anything else you'd be watching out for on an urgent basis going forward from these GoMs, etc.?
Yes, so I mean, one clearly is on the rate rationalization, right? So 5, 12, 18 and 28. What exactly do they do in the rate rationalization? Of course, there are multiple options. Either 5 and 12 could be merged into a single rate of 7 to 8%. 12 and 18 could be merged to, let's say, 15, 16%, and so on. And every decision that they take will have a wider ramification for industry. So that's clearly one area to watch out for. Compensation cess, what will be the future of compensation cess is another one. I also see that over the next few months, what structural changes government is looking at. Do they want to bring in petroleum products under GST? Do they want to bring in real estate, everything under GST and so on? On petroleum products, I'm quite hopeful that on natural gas and ATF, perhaps a decision will be taken soon. And the last but not the least is, are we looking at simplification of GST legislation and things like input credit provisions and so on. So I think next few months will pretty much determine what kind of GST we're looking at over the next 5 to 10 years. I mean, what's the future of GST in India? So interesting time for all of us to kind of keep a watch on.
You know, natural gas was thought to be a sort of a low-hanging fruit, right, Pratik? Clean fuel and all that. But what's holding the government back, you think?
Look, I think I agree with you. It's a low-hanging fruit in that sense. The revenue implications are not that much. And it's a clean fuel, and we're looking at, our net zero ambition and so on. I think there are a few states which are impacted more than others by this decision. So I think there is a consultation happening between the governments, and it will consensus is yet to emerge. But I think that has to be the starting point. I think over the next few months, I'm quite hopeful that on natural gas, they will look at including that in GST.
You'd agree, Saurabh? And what's on your radar looking forward?
So I think gas is one particular area which should come into the ambit of GST, and the government has been looking forward to it. I think one more important point is around the electricity. I think there has been 2-3 times the study has been conducted by the government through their nodal agencies and Ministry of Power around whether to include electricity into the ambit of GST or not. We know that the cost of power in India is by far higher compared to that in many of the other neighboring countries. And it's a requirement of the hour to bring down the power cost, and maybe by including electricity within the ambit of GST, we can bring down the cost of electricity for the consumer as well as for the commercial and industrial customers.
Got it. We'll leave it there. Gentlemen, thank you very much for joining us, Pratik and Saurabh. Thank you for being with us here this morning on CNBC TV 18, and appreciate your time here.